Hello everyone, Ali is here from Sophie Financial Network. Today is February 6, 2022. Let's go to the chart for S&P 500. Here's our monthly report for all the major indexes in US market. S&P 500 monthly chart. We just start months another February like a January volatile month, and we had like a pretty nice support, a good one actually. I would say around a 44.57, 44.38, which is a 4400 and 4300, the one that I was looking for as a major support. And as you see, market so far hold up pretty well itself above 42.91, which is pretty close to 4300. And we should see how far we can stretch out to the months of the February, just because this month just started, so we can't tell anything for the monthly candle. But if we go to weekly chart, I have better information. Weekly chart, we just test last week. We just go all the way up to here to 45.76, which is a moving average SMA 20. And that is pretty good resistance, just because we had very sharp sell-off 2 weeks ago, and that was like a hard knife through the water. So it took lots of energy to break this pivot down. So that's why market, whenever goes down there and it wants to back it up, so it hits pretty nice resistance here. As you see here, my point here is the very nice sharp resistance. We need to go above this level to start to see a bullish momentum. Otherwise, we can see a very choppy, sloppy consolidation inside this red bar. This weekly red bar is kind of like a strength for the bears, because they're going to say, okay, we are going to consolidate here and probably another spike down to this level. There is a possibility, but I'm not sure, because as we are moving forward, especially to the daily chart, I would say the possibility for another low is getting lower and lower when we are holding up pretty well above 4,400. All right, so here is the stochastic momentum index, which is pretty important. So as you see for the weekly chart, we are pretty oversold. Like this is the most oversold reading that I've seen since COVID-19 crash. So even this one, we are kind of like a slightly getting below this level, and this one is pretty close. So for the momentum wise, we are kind of equal, but for the stochastic, like a regular stochastic, this is pretty bearish, and this one goes all the way down to here. So again, as I say, for the negativity inside the market, this is the most bearish reading for the stochastic. We can see in the weekly chart after COVID-19 crash. So it gives us opportunity to say, okay, here is the bottom, and bottom is very close. I'm not sure if we hit the bottom, but we are pretty close to the bottom. That's what I'm saying. So I wouldn't say that there is no possibility for another lower low, just because there is. But as we are moving forward, the possibility is getting like very low probable, right? So again, I'm looking for this crossover. If we get a pinch here on the stochastic momentum index like this, so I would say the bottom is there, and probably this week is going to tell us exactly if we are getting into the bottom or not. So I would say keep an eye on this week. Still, we are into earnings season, and we should expect lots of volatility in the market. But big fangs like a Google, Microsoft, Apple, Amazon, they just announced their earnings. So lots of weights actually just took off from the indexes for the volatility side. But still, there is going to be surprise. I'm not sure, but what we should expect that. All right, so let's go to the daily chart. So daily chart, I just provide a couple of work for you guys. Just give me a second. I'm gonna delete this. Here is my wave count. So first of all, we had a very nice bottom here, 44 to 43. This is inside this green bar, and we just pinched and pierced through this area, as you see, and just back up sharply. And this is a crazy sell-off. I would say this is a crazy sell-off or silly sell-off, some people are saying. And we are getting back up pretty nicely. Like, look at this price action. It's pretty similar to here. So we are getting pinched down there, but we are getting below 200 SMA on daily chart sharply and then coming back up. So whenever this happens, this is a bullish sign, not just for 200. We are getting back up above 150 and we pinched 100. This is very, very sharp bounce, which another correction is expected. And that's how we are seeing last 3 days. We had slight correction down there. But look at the shadows. Look at the price action. So whenever price is going down, there are lots of buyers down there. Again, the best case scenario for me is going to be we pinch this area. But I'm not sure again. Just because if you use Fibonacci retracement, which everyone needs to do that, here's the level. And if you're at the wave 1 of this impulsive move to the upside, 38% is a pretty textbook Fibonacci level that we can expect. So we just test on Friday and bounce back up. So this is a very, very preliminary wave counts. And again, there are lots of scenarios that wave 2 going all the way down to here to 61 to 78% even sometimes in a very, very stretched one. But this one can see a very, very good support on 200 SMA and a 38% Fibonacci, which gives us confidence that probably that's going to be wave 1 and wave 2 completed here. So this week, if we see prices coming back up and go above this wave 1, so probably the next target would be here, somewhere here area. So 4,700. That's the middle of this area. But this area, let me put a line here exactly what I mean. So here is this 4690 to 4741. That is going to be an area. So I just put it there. But again, because I'm not sure, so I just keep these two boxes here down there. This is for stretched Fibonacci level for 61 to 78% correction and then going up. Or this one is going to be a very, very bearish scenario that we can see another going down, spike going down to complete, because some people are saying this is wave 1, wave 2, wave 3, wave 4, and where is 5? Where is 5? So 5 is going down there. So some people still are waiting for the wave 5 completed here, then get to the market. But sometimes wave 5 is getting incomplete. It's getting by like XWXY pattern, like a very, very incomplete, choppy, sloppy, kind of like a zigzag pattern, and then going up. So I would expect that is the most probable scenario. But again, we should be ready for alternative solution and an alternative wave count, and that is going to be a possibility still on the paper, right? So, and if you're getting above this, then we can go all the way to 4,700, and then we should expect somewhere around like end of the February we can complete wave 3, and then going down for the March, going down to here. And by middle or third week of the March, that would be ideal scenario, because that along with equinox, and we get reversal, and reversal shoot us to another new all-time high. So this is a roadmap for me, but I'm not sure if that is getting unfold. We are trying to just give us like a strategy how market is doing, so we can just adjust the strategy afterwards. Okay. Here is, let's go to NASDAQ. Here is the NASDAQ. All right, so NASDAQ, as you see, stochastic is getting on the bearish crossover, but it is not in overbought area. So that can be just a corrective move to the downside. And NASDAQ hold it up pretty well above 38% Fibonacci, and that is giving me a signal. Okay, probably we are getting into another impulsive move to NASDAQ as well, like going to this area somewhere around 15,500, 15,800. That's going to be a third wave for the NASDAQ, and also this is a supply area as well. So the key important point is this pivot needs to take out by the next impulsive move. So if you're going up and then going down, probably that's going to be zigzag. But if we see like a bullish wedge pattern here, so it gives me confidence that okay, we're going to spike up probably in 2-3 days to this area, and that is to be a possibility for sure for NASDAQ. Okay, so just keep an eye on that. Again, NASDAQ is the same scenario like S&P. If S&P goes down, NASDAQ is going down as well. So S&P is going to be a leader for the market, right? All right, here is another chart, which is Dow Jones. Dow Jones had a very, very nice pattern. Lots of people are saying this is QM pattern, but I would say we should wait. We should wait, and we shouldn't just take an action just because this is QM pattern. Lots of pattern failed by NASDAQ or Dow Jones just because they're major indexes. Look at that. So this is another QM, kind of like similar to QM pattern. We're getting to the lower low, but after that we didn't break down to the downside target. So we are just going up and then higher low and then going higher as well. So again, don't get to those patterns just because they're formally done. We had very, very high volume here reversal, and this high volume reversal pattern is very, very more stronger than this QM pattern, I would say. All right. So let's do some work for the Dow Jones here. So here's the Fibonacci pinball. So as you see here, again 28%. So Dow hold up pretty well. If you see S&P, if you see NASDAQ, they are getting into like a NASDAQ goes down to 50%. S&P hold up pretty well at above 38%. But Dow Jones even didn't reach the 38%, just getting a couple of points above, which is pretty important that Dow Jones now is the stronger index among the other one, right? And the weakest is Russell. We are getting to that one as well. But if we take out this pivot right there, we can go all the way up to 36,000. I would say this is the major pivot and major resistance here. Probably 36,140, 36,420 is going to be a major resistance going forward. So just keep an eye on that. Again, there is a possibility we can go down to test this probably 50%, because Dow shows me there are lots of buyers here. So again, we can go to 61%, but there is very, very low possibility. So just keep an eye on that. We can get to 38% and then going all the way up to here after taking out this pivot, right? So the next one, which is very important, and I believe this is the most important index now, just because it has completed its 5-wave correction. So this is 1, 2, 3, 4, and then 5, right? So if you count this one as a 2, some people are saying no, this is not 2, this is 2, so we are getting into 5. But I would say there are 2 possible scenarios that we are saying 5 is done. So even if you take this one as a 2, like a 1, 2, sorry, this is 1, 2, and then 3, and then 4, and then 5 is done then. So you can't say these 2 lows just because they're pretty close to each other. They are not gonna count in 2 different waves. I would count this in 2 different waves, and probably we are getting into a very, very nice pullback after this rally, after taking out this low, this resistance by these 2 shadows, and then taking and then coming back down. Let's put a Fibonacci. Just give me a second. I'm gonna give you a Fibonacci pinball, and also this is a very, very major major area, like a demand area. Look at that. Here's the gap. This is pretty nice demand area after this gap higher, coming back test, and look at that, what happened, how market reacts to this one. So let's go up there. So here is a beginning, I think the beginning of the, just because we are getting into pretty close to 61%, huh? This is very textbook scenario for the deeper corrective move. And if we are getting above this pivot, I would say we are getting above this SMA 20, and then we can go all the way up to the next move, which is going to be here. So 2100 to 2120, that's going to be possibility if we are taking out this pivot. So just keep an eye on this level. So Russell can be a leader now after a deep correction. Like Russell was like demolished after November. Look at that. So we thought that this is a nice breakout to the upside, but after November, Russell goes down and it didn't get to the new high, and then we are hitting, like, I don't know what's the percentage, as we can just measure the percentage here. Probably about like a Russell goes down more than 20% correction. So this is 23% correction. So some people are saying we are into bear market. If you look at the Russell, we are below 20% correction. So we are at 23% correction. And that is pretty sharp and deep in Russell. So Russell can be a leader if we go back up here, and if we are starting to wave count in the bullish formation, we can say that correction is done, is complete, and we are heading into new all-time high probably for all the indexes. Okay, all right guys, so here is a weekly wrap for the first week of February. If you have any questions, just please go down below and put your questions. Okay, before we just wrapping up, I would like to show you something else as well. Here is the sentiment for the last week. And as you see, we're still in very bearish sentiment starting months of the February. And last week or 2 weeks ago, if you remember, I showed you this one. And this is the most bearish sentiment that I've ever seen after 2020 COVID crash. And still, bulls are not taking in charge, which is good, which is pretty good, just because it gives me a confidence that, okay, we are at the beginning of the end of the correction. So this bearish sentiment gives me a confidence that okay, we are at the beginning of the end of the correction. Okay, and here is the fear and greed index by CNN, which you have seen, like, posted a lot. So we are still into fear mood, and if you're going down there, we just hit we just hit very extreme low right there. So if you remember, just the bottom there before a bounce in November, we hit 20 a level, which is extreme fear. So 20 and below 20 is extreme fear. So we are at the fear mode, and this gives me that signal that we are probably, if this one goes down there, so we are at the final bottom. So if we were there here on the bullish side, that would be very negative, just because we see that lots of people are getting bullish down there. So this means we are going down. So market is doing always vice versa. Market is not following this one. This is contrary indicator. So when we are at the extreme fear, it means that we are close to the bottom. When we are at the bullish sign, which is a greed or extreme greed, whenever we are, it seems like we are heading into a correction. So this now gives me a signal based on the price action, the one that I show you, and here gives me that we are not in the extreme greed, which is good. Just because people are staying on the side and institution is buying stocks, and when people are coming back, probably we are here, right? Okay, so hope you enjoyed this video. Please give us your comments. If you are not subscribing our channel, please go and subscribe. Hit the subscribe button, hit the bell button, so you will get the updates sooner than the other people. Have a good one. See you on the chart. Bye bye.